How you guys doing, Chinamati family? This is another episode of the podcast, and this week we have a guest who, how would I define you? You kind of are trying to solve our local capital problem from a very high level, from a different angle, and I thought it would be important for people to understand how capital flows in our market. So we have the wonderful Esther Ndeti, who the work you do is so important, but it's so, in a way, under-celebrated so far and appreciated and recognized. Kind of nobody knows, at least as far as the entrepreneurs are concerned, who is our audience, that you exist and the important work that you're doing to activate the ecosystem and drive some of the change that we know we need to see here. So, with that said, Esther Ndeti, welcome to the podcast.
Thank you, Mark.
Yeah, so the way we do this is very kind of conversational.
Okay.
The idea is to just let people know about what people are doing in the ecosystem in terms of enabling startups and just unlocking the potential that we all know exists here. We've typically hosted entrepreneurs, but also increasingly domain experts and people who are just involved in trying to kind of open that space. So why don't you tell us who you are? I know I've introduced you by name, but who you are, high school background.
High school.
Yeah, start there. Because people like that. People are like, oh, okay, so you know how we relate to each other in terms of where you come from and how you got to where you are. So.
All right, no, thank you, Mark.
Career track, that's kind of the idea.
Yeah, no, thank you. Thank you for having me. I'm a fan of your podcast. I listen to it.
Really?
I think so. Like, I've listened to quite a number, from Mary Mwangi to a bunch of others, really, over the past few months. So, thank you for having me on the show today. So, yeah, I said my name is Esther Ndeti. It's interesting that you mentioned high school because we have a high school reunion dinner tomorrow. So,
wow.
I've been busy looking for my...
Can I ask which year? Which year you can remember?
Many years ago. I know I look young. Yeah, so we have the 70s themed, so I'm busy looking for platform boots.
Wow.
So if anybody knows where to get platform boots, maybe, between today and tomorrow.
Reach out and I'll pass the information on.
Yeah, let me know. But yes, no, I'm born, raised, schooled, everything, most of everything in Kenya. I like to say I'm true East African because I went to 3 high schools. I did the first 4 years, 844, sort of like the KCSE in one school, Pangani Girls. Yes, I'm a Pango girl. I think all the best, women out there actually are Pangarians, but yeah.
That's a strongly held personal opinion.
Yeah, me and a few other 1,000 women in this town think the same. But yes, so I went to Pango for 4 years, did my, KCSE there. It was a school with very strong personalities, which was fantastic because, you only look in retrospect, right? You're able to navigate that system. We were the biggest girls' school. I think it's still the biggest girls' school to date.
Really?
So yeah, we were in a class we were 50 in each class.
Wow.
6 streams. So every, form had like 300 students, yeah. The school, so from 1 to from 4, 1,200.
Yeah, that's pretty big.
I'm sorry about that.
My phone goes off right on cue. It happens.
I'm so sorry, let me just turn it off. So yeah, no, we were big, so different personalities from all across Kenya as well. Mm-hmm. Just put this off. It's never on sound ever. So, meet people from all over Kenya. We had people from, from Nairobi and from outside Nairobi. And this later on, was key in being able to navigate and being able to network and understand people's personalities and being able to sort of like just be gel and, just be able to think broader than sort of like the circumstances that I've been forced to, live in up to that point.
Expanding your horizons.
Absolutely.
Kind of understanding people. Situations, backgrounds.
Yes, exactly.
Yeah.
So then, in between the wait, KCSE results at the time used to take, I think maybe up to 4 or 5 months before they would come out.
KCSE for the foreign audience is our
national exam
for people who are
finished high school moving into university.
Exactly.
Yeah.
Right.
So it's basically the grade that you need to get into to universities here. Yeah. But I didn't want to go to university in Kenya. I was hell-bent on going to the United Kingdom, specifically the University of Bristol. They had a fantastic course in aeronautics. aeronautical engineering. I'd already, studied it. I'd looked at sort of like, the trajectory of students who go into that course and where they go after that. They're either hired at Airbus or Boeing.
Wow.
Or,
You had it all figured out.
I was very driven and I knew where I was going to.
Wow.
So while waiting for my 844, I realized that whether I passed or not, I would not be eligible to go directly into the University of Bristol without sort of like bridging into the UK system, the GC system, right? So I talked to my dad and I told him I'd like to do A-level and to shift from, I know I've done 844, I've finished a KCSE, but I want to shift now to do the British system. Yeah. So he was up for it. He's like, you want more schooling?
Great.
That's fine.
That's an African.
Yeah, and then I opted to take, and then he was like, what school? And so I need to mention that I'd lived in Tanzania previously. Okay. So I opted to go to Uganda for my A-level, and he agreed and he chose a school there. So I just want to mention that I did my year 12 in Uganda, and then I opted to do year 13 back in Nairobi. So I came back here. So that's how I ended up doing 3 schools.
So you did so you did 844 in Kenya,
yeah,
right?
8-4, yeah.
8-4.
Yeah, the 8 for primary, and then the 4. Yeah.
And then you went to Tanzania for a year?
Yeah. No. Tanzania was before. Tanzania was something just like, back and forth with my parents, yeah. Okay. But I did Uganda for a year, and then I went back to Kenya for those are the 3 schools, yeah. Again, broadened my horizon, met people from across the region. I can say I'm truly East African because I've lived in Tanzania before, I've schooled in Uganda, I'm Kenyan. Awesome. So, that's a bit of the background around high school. Right. I should tell you that my KCSE results came. I had done really well. The University of Nairobi sent me a letter saying that they would like me to study mechanical engineering at the university. And then I applied to University of Bristol, I got in, and my dad looked at the fees because the university called me. That means I get sort of like a bit of like a scholarship of sorts, right? So the total fees, everything, accommodation, everything, books, everything comes to $250 a year.
A year? Wow.
And then University of Bristol was something like £30,000 a year. So my dad was like,
not a difficult choice here.
And he did that. He did this, yeah. I'll never forget. So that's how I found myself at the University of Nairobi studying mechanical engineering.
Man, that's so how did you feel?
For the first year, I would say I was a very
unhappy person.
Yes, I was very unhappy. Once I realized, actually when I started doing the classes in first year, I realized, because in A-level I did 3 subjects. I did physics, chemistry, and math. Okay. And in advanced levels of all 3, right? Mm-hmm. So when I joined university, the first year was all the units I'd done in A-level around physics, so organic chemistry, physics, and the math, everything. Like everything I'd done in the 2 years was being done in year 1 of the university. So not only was I not in the university, but I'm doing the same thing that I'd done, prior to that, right? So I was very unhappy, but I also spent a lot of time trying to see how I could get a scholarship into either the University of Bristol or another university that has aeronautical engineering. So I spent a lot of time out of class just trying to get a scholarship, which I got a partial scholarship somewhere, but my dad was like, still, $250, that's right. Yeah. But no, and then, things, and I believe this strongly, I think things happen for a reason. You never see it then. Yeah, but then, now I say I'm happy I went to the University of Nairobi, the people I met, the lectures I had, everything I did there, the clubs and associations I joined when I was there, fantastic experience, and that's now I'm here.
Right. Yeah. So after a while, after your first year, the ice shelf kind of started to thaw out, and you kind of started to enjoy yourself a little bit, or at least bed into the environment. Yeah.
Well, let's say I got used to it, and then I was able to also make good connections as well that were able to, sort of like reroute and tell me, okay, now you're here, you might as well focus here, and put your 100, show up, because you're here. This Bristol business, you need to maybe think about it for your masters, but now you're at the University of Nairobi, just focus. And then also I joined a group called ISEC at the time. Yes, that's what.
We have quite a few ISEC people.
I know you mentioned it before, and I was smiling. I was like, yes. So yeah, things like that. I was plugged into so many different activities as well. So I was able to sort of balance out and just be happy where I was.
That's great. And so, I guess fast forward to now career path graduation. How did you end up at EAVCA, which is East African Venture Capital Association? Is that what it is?
So it's actually East Africa Private Equity and Venture Capital Association, but you see how that is a mouthful.
You can't make a
that would be like EAVCA. So we say EAVCA.
The African people, somebody on a comedy show called some other. Anyway, I digress.
So yes. And why I mentioned ISEC was because some of the programs I participated in or sort of ran or was a part of had a lot to do with entrepreneurship. So we ran this program, I remember, called YES, which was Young Entrepreneurs, the S at the end, right? Where we partnered up with, we got funding from KCB Foundation, for instance, and had a few other partners to sort of grow entrepreneurs from different parts of Nairobi and give them skills to sort of think about entrepreneurship and give them skills to sort of grow it into some business of sorts. So we're doing this already at university level, right? It was such a successful program, in my opinion, really. And then this also exposed me to sort of what other career paths can you think about? Because what I'd seen at the university is that you studied, so in mechanical engineering, it was very standard, right? You finish your 5 years at the university, you join Kenya Airways, EABL, sort of some of these big
5 companies you could
or Kenya Pipeline or whatever it is, right? And then you join and you become this little cog in the wheel, and and that was never going to be me. That was just the more I participated, the more I learned about entrepreneurship and building your own initiatives and things like that, the more I knew I couldn't be in a position where I didn't have autonomy over decisions or over the work that I'm doing. I couldn't be a small piece. Unfortunately, I'm not that person. I couldn't, and I'm not saying employees of these organizations are sort of small pieces or whatever it is. It's just that my nature and personality, the more I learned about it, is that I learned I want to create things. I want to do things. I want to build and fail and try again and not have to have the weight of a company's sort of success that is not mine, So
yeah, I mean, I can totally relate to that because that is the struggle for a lot of people, maybe a minority of people, right? This idea that I want to be out here creating things and being part of that creative process, but now I'm being kind of, the whole story about how you create a career and a life is this notion that you have to fit into this big structure, and kind of that's the holy grail. That's what you've been promised.
That's what we've been taught. That's what from the very beginning, from primary school into high school, it's all about let's, pass your exam so you can get a good job, for instance. But then the experiences I had, particularly when I was in ISEC, exposed me to so much more. That was 1. 2, we were, you'd have to raise money for these programs that you were running. So we'd have to learn how to make presentations, proposals, how to do networking and all of this. None of the things that I learned during my engineering degree, but they came in handy like no one's business, right? This extra set of soft skills. And I knew I had to apply them. So if you look at my sort of my career path, it really doesn't have any sort of traditional, path that everybody else sort of followed, right? I tried, so I like to say I'm a recovering entrepreneur. So I tried to do a few businesses here and there. Some failed because of lack of sufficient knowledge and business processes and sort of financials of businesses and things like that. I'm the first one to say that. I went in, I have a degree in mechanical engineering. I'm the smartest person on earth. Well, well. Yes, I'm not. I love such an attitude, and I do a lot of talks with technical founders, people who have engineering backgrounds, and the role of how you should probably incorporate people who are good in marketing, people who are good from business schools or whatever it is, because a business is not the idea that you have in your head, right? Or the concept that you have, or even the product you produce. The business is now how you take this to market and grow it, to a proper business. Yeah.
I mean, it's amazing that so most people, that is one of the biggest struggles for entrepreneurs in general, specifically technical founders. This is not even just a local problem. This is a global, where I kind of learned my stuff. There's a firm, a VC firm, and you probably know about Andreessen Horowitz. Right? They pioneered this notion of creating a support platform infrastructure people, right, in their VC fund to enable technical founders to do those things, right? To learn the business around the idea.
Absolutely.
Right? And so for me, when I saw that and I kind of was exposed to that, I was just like, wow, this is amazing. And their whole thing was, how do we keep technical founders from being fired by VCs because they're messing up the business? But anyway, I digress. So I guess my point is, that's significantly insightful, and I think it comes from your own personal experience. As a technical founder, you felt that, I got this, man. I'm an engineer. Back off.
And and an engineer who'd done proposals, who'd done, So I was like, I've got this. Like, there's nothing new you're teaching me.
Right, wow.
Man, I learned quickly that there's so much more to building a business than sort of like the things that I thought at the time, right? If I could go back, there's so much things I would tell my younger self. But anyway, life is, to learn, to make mistakes.
Because at the end of the day, there's still the future that you can still take those experiences into.
Absolutely.
My whole thing is that in our market, there are people like yourself who will be valuable. And even I know a friend of mine who was actually at a startup for a few years after high school. And then now she's been recruited to lead another startup that's growing. And those skills port very well. So I guess my point is, people like yourself are the ones who will probably grow the companies that will scale out of Nairobi into Africa. That's just how I see it, because you have this superpower of, you've done some stuff already as an entrepreneur, you've learned from those processes, you appreciate that, I don't know everything, but you're still, you still have that ability to grow things. I'm really excited about people like yourself in this market.
Good, I'm excited about people like myself too. So I'll skip through sort of like a number of those failures that I did. I spoke about maybe the last.
Failures. Honestly, I think
I do, and I embrace them, and I speak about. So there's a
learning experiences.
There's a forum called the Fuck Up Nights that's held by one of the spaces in Nairobi, and I go there and I speak about them. Like I proudly talk about my failures, but I talk about them. Why I talk about them proudly is because that's why I grew from. Exactly. How you treat your downsides or treat your bad periods, and what you learn from them is how you grow, right? Totally. So I embrace them. I'm like, man, I'm a failure. I'm a recovering entrepreneur, whatever it is.
I think
it's because
is too final. I think it's this is for me. This is, I'm not saying don't talk about them. Yeah. That's great.
Don't call them failures, is what you're saying.
What does failure? This is a journey. Yeah. Right. So here's what I've learned. Yeah. Right? The things that I went through at a certain point in time, the experiences, they tend to serve you down the road, right? Yeah. Because they give you this kind of maybe a jigsaw puzzle of who you become and what you're able to do. Yeah. So if you just look at things as experiences as finite boxed things, then you can see them.
That's because we've been taught that failure is a finale, like a final point. I believe in failure as part of the journey. So when I say it was a failure, it doesn't mean life stopped there or I stopped. And we can have this whole conversation for a very long time.
Let's move forward. Let's move.
So I'll just fast forward to sort of like the part that sort of like really made me move into sort of like this ecosystem level. So I had co-founded a business. I won't mention the name of the business because
why?
We'll talk about that one day. So I co-founded a business. And it picked off really fast, really well.
This was what business number what in your career?
I think it was the third.
Okay.
Yeah. But maybe the first proper, everything laid down properly. Okay. We know our growth plan, everything, sort of like have our market in check, already. By the time we were rolling out, we had customers across the region, not just in one place. You know,
Wow.
it was really well thought
So
out.
it
We
was
had a
you
good
and who?
supplier, me and my former co-founder. Yes,
Okay.
and I'll tell
You'll
you
explain
why.
why you're-
Yeah, why I've said it like that,
Okay.
right? So yes, so and then he was a co-founder, but was working full time somewhere.
So how are you a co-founder working full-time somewhere? What
Which
was
is
he
fine.
doing
It worked
before?
fine for me because remember I like to manage and do things and run around.
You're a control freak? No.
No, I am no freak whatsoever.
But you like to own the process.
Yeah, and also I like to get things done.
Awesome.
No, but he was extremely, he did a lot.
Okay.
His skills were really on sort of like when we're doing the strategy plan and things like that, we'd work to
Complementary.
Yeah,
Okay.
it was very complimentary. We'd
Okay.
really grind things through the night.
Okay.
And then
Awesome.
and then he'd go off to the office, and then
So there was
I'd-
real material input.
Oh, yes.
Awesome. That's great. That makes sense.
Yes, like significant,
Great.
So we owned the business 50-50 until today. I'm like, and I talk to co-founders, I'm making sure, I always ask, are you 50-50? Because no, sometimes 50% each, that becomes a challenge down the line at some point. So anyway, then about, I think it was a year and a half later, maybe 2 years, going to the second year, business is picking, we start having divergent views on sort of like how to grow. When like we have a growth plan, we have strategy document, we have everything. I'm passionate about growing organically, and he had a divergent view, decided to resign from his place of work,
To come full-time.
got a huge package, severance package, and then started having challenges about capital input and things like. We started really having big fights.
So you had founder dilemma issues.
Founder
You know-
dilemma
you know the
issues.
book, right? Have you heard of that
Yes.
book? Okay.
Yeah. I was extremely surprised and taken aback,
the experience.
because we've been really at par on everything up to that point, and then everything just started falling apart. Now, because we didn't agree on sort of like how we're moving forward, checks were not getting signed. And, when you have an agreement where both your signatures need to be there before anything is approved or what, so many things started happening that were now literally grinding the business, coming to a halt.
Wow.
Yeah. So. It was back and forth, and then suddenly at some point I saw a lawyer show up calling himself a company lawyer. I'm like, I know the company lawyer. Who the hell are you? Who the hell are you? And it just, from there, it just went south completely. That for me was a really painful experience. But then because it didn't seem like we were going anywhere with this. I think I would just have to exit the business.
Right.
At that point. I got my own lawyer. The lawyers talked it out and sort of like found ways to sort of like split our assets and everything. And, he was left with the business. And I was extremely upset, and I didn't talk to him again
Wow.
after that.
So before you continue, so this is such a underrated, underestimated thing. You meet young people who have entrepreneurial ambitions, and they always underestimate this issue here of how do we resolve conflict, how do we actually deal with this ownership, best practices around vesting, right, as opposed to kind of, like you said, 50-50 is an issue. How do you deal with that stuff?
Yeah.
And these are the things that kill businesses. That there's statistics out there that says 65% of the reason startups fail is people issues. 65%.
Absolutely.
Right? So it's not even about the market. It's not it. And the other thing is timing. But I didn't know this about you, and I have a completely different view of you now, which I am so glad that now you, because I'm so glad you're on the podcast, because our people will relate to your story, and you have so much to give. Anyway, so what happened next?
Okay, so at this point, I want to say many things. One of the things at that point, I realized during my frustration was I didn't understand where, because one of the biggest arguments was sort of like capital, right? I didn't completely understand where to get capital to grow the business to the next level, right? Like many Kenyans, and that's a true fact to date, when you need money, where do you go?
Friends, family.
And then? When you need
Banks.
real money, bank. So of course I turned up at the bank. Hello, my name is Esther Ndeti and I need XYZ million shillings. And this is my business plan. This is the sales we've made so far. This is the growth plan. And, they're like, who the hell are you? I don't have collateral, not for the kind of money I was looking for, right? I have no proper track record. I have no, it's, in fact, if you go back to sort of like the two other businesses I tried, like, man, I am no candidate whatsoever for any financing.
From traditional finance.
Yeah, and I'm coming to them at a point when I'm in conflict as well, right?
Whoa.
So even if they were to call up my co-founder, it's probably not going to be the best place for me to be, looking. So I realized that was one of my key problems. And I'm not the only one. I was talking to a few other people aside, businesses around me, and they're like, yeah, too bad. Or why don't you, so you or just Google, maybe there's a grant somewhere or something. I didn't understand the deal, the capital side, investment space, nothing. I didn't really grasp it, That's humbling for someone who thinks they know a lot, right?
Yeah.
So I just wanted to mention that.
What year was this? What period was this?
This is, what year are we now? This
2019.
This is close to, so I have an 8-year-old daughter, she's turning 9.
Right.
And I remember saying at the time that, I have 2 babies. Yeah. So I had
Okay.
that baby and I had,
So
so
about
it's about
2012.
8, yeah, it's about 2012, yeah.
Yeah, and that's a very kind of like, it's an early time in our ecosystem, right? It was just starting to be.
Especially for the early stage entrepreneurship
Totally.
space side, yeah.
Right.
More established businesses had been there for a long time.
Different.
They source capital from different places, things like that, right?
Equity
Yeah.
was kind of there.
Yeah. I think I actually wrote to one of the people. But I'm not sure, I can't remember, but I know I wrote to the wrong people. I showed up in the wrong offices. I just didn't understand what I was offering or what I was trying to look for at the time.
So fascinating.
So
So let's kind of, let me interject here a little bit and maybe just pose this as a question. How many good people and opportunities and ideas fail because of this in our market?
several, many.
What percentage? What would you say?
I can't put a number to it, but I'll tell you it's on the majority side for sure.
Yeah.
And this is why you'll see, I mentioned earlier, I do a lot of like talks and I plug in myself to any sort of like groups of, idea making, whatever it is, ideation groups or whatever it is, startups, sectors or whatever. I try to impart as much knowledge or open up my network if possible because of that.
You know what, this is why we do the podcast, right? Because at the end of the day, it's like, why should people repeat the mistakes, experiences that others have made or we have made, right? People should learn from each other, and that is the purpose of this. And so, it's great to have you. So continue. So now business has fallen apart.
So before I move to the next part, because the next step explains how I got to the EAVCA and sort of like now, my path right now. There's something you mentioned with regards to sort of like conflict management and whatever being a key part of skills that people need to build in this market.
Right.
If there's anything I regret in this, in my life, it's the fact that, I walked away, I closed that door for my co-founder and never spoke to him again.
Wow.
I truly wish I could go back and learn how to have dealt with that. I would still probably leave the business, but not leave it in such a way. Because what happened in the end is my co-founder died this year. He passed away. Actually, he passed away on my daughter's birthday.
Wow.
Like in surgery somewhere out of the country. And all I could think about was it worth it? Like, was it worth it? Because before the business, before everything, we were very good friends, right? We were very good friends. We were able to bounce a lot of ideas between each other and, be able to create a business together. So, I don't think it was worth it at all in terms of the conflicts not being solved. Like, we should have found a way to,
this is one of the things that I kind of like, okay, let's dig into this a little bit. So when you go back and you look at the issues, right? When you look at the issues in the business at the time, were they resolvable? What if you had it to do all over again, how would
I wouldn't know, because I know myself very sort of hell-bent and as I grow older, I've learned how to sort of like take more input and listen, do a bit more research and be more flexible. But then I was not me right now, right? So I would still be very stubborn in terms of my approach. He was also very stubborn in his approach. So I'm not sure we'd be able to resolve.
Did you have a board? Did you have advisors?
We didn't have a board. So yes, so we thought we had all the structures in place. We had advisors, but not like formally, right? You had people we talked to on the side, who of course now take sides, right? When you have an issue like this. Depends.
This is so interesting because there's this one gentleman in Silicon Valley who passed away recently. His name is Bill Campbell. I don't know if you've heard of Bill Campbell.
No, maybe.
So Bill Campbell was the coach to Steve Jobs, coach to Eric Schmidt, coach to Ben Horowitz. Like this guy was a mentor to some of the industry titans that we know today, and helped resolve a lot of the issues that existed because some of these people on each other's boards. When Apple and Google started their conflict thing, there's this other story that he kind of helped mitigate some of those things and the relationships and so on and so forth. The point I'm getting at is this is a life thing, right? Having somebody who both of you respect, maybe, who can help to kind of guide. But in hindsight, it's 2020. I'm just kind of relating it to, I guess my point being is it's not just a problem that you guys face, it's a problem that everybody faces, right? No matter
but they have this coach person, right? So these are things I think that need to be cultivated and really adopted in our market here. Because remember I mentioned the fuck up night that I participated in? That night we were, I think, 4 or 5 speakers. Not by design, each of us, our story was about a fallout with a co-founder.
There you go. So
and every one of us.
This is fundamentally, I know this is built into the issues that are a lot of the reasons why companies don't make it out. Layering on top of that lack of experience. This is a lack of experience, lack of know-how thing, lack of just, and when I structured what we do here in Impact Africa Network, I have spent a long time thinking about how do you plan for that? How do you create structures that create alignment? Because I've talked to a lot of entrepreneurs as I was kind of doing my process of looking to figure out how do we enable entrepreneurship. And every single time you can see that blood in the water, right? 5 co-founders, all of them, just issues. Anyway, I'm just, this is crazy, but go ahead.
Yeah. So I wanted to mention that. I think it's important to just, I try to share that story just so that the co-founders out there, they can start thinking about these things well in advance. Not that you're planning to have conflict or anything, but it will happen. It will happen. It will either make you or break you.
Totally.
But then there has to be sort of like systems or structures or some sort of solution sort of like deal with that.
Yeah, conflict resolution plan.
Yeah,
a structure that allows people, like from the beginning, here's how we make decisions, here's who.
We have a board if possible. We have coaches and whatever it is, right?
Yeah. And I think maybe, I don't know, I mean, it's easy to kind of say it offhand like this, but I think this is such a big problem that there's gotta be, there's an opportunity for a startup here, at least for our services business. Esther?
You?
We?
Mark? So
go ahead.
So anyway, I think at that point now, after sort of like, in between all that, furor and all that, dilemma and everything, I was like, I'm not starting another business.
I'm done.
No, I'm done. At least for that moment, I was like really fed up.
Exhausted.
But I also want to understand what the bigger ecosystem looks like. I want to immerse myself. I still want to be in this space, but I just don't want to run a business.
You don't want to run a business. Makes sense. Take a break.
If you call it that. So and timing is always an interesting thing, right? So the Aspen Network of Development Entrepreneurs, Andy, at the time, was looking to hire its second employee in East Africa. And so they put a call out, and I looked through the job description, and I was like, this is me. They needed somebody who's able to create.
Esther Ndeti, can you come and work?
Honestly, I read it, I was like, hello. I'm here.
Right.
Sort of like be able to reach out to different stakeholders, be able to, sort of like, so the networking piece, the building programs piece, understanding local entrepreneurs and everything, and sort of like being able to work with the intermediaries to sort of like strengthen their programs and connect them to entrepreneurs, all that stuff. It just sounded like me. And also because I was coming back from the entrepreneurial side, I was like, I would understand this and I would tell them exactly what the issues are. But more than that, I would understand who these intermediaries are, understand the space a lot more, and then also work to bring back that information, because I felt, and still do, that there's a huge gap in information. There's, when we talk about challenges in this market, we talk about lack of capital, talk about lack of market access, and whatever. But for me, information is number one.
Right.
Yeah, always key. Let me not say number one. I don't like to hierarchize.
So, for example, for us, we are non-profit entity, we're doing some very, very important work, at least we think we are, and people keep telling us this. You know what our biggest challenge is? Who cares about what we're doing? Because we know there's a lot of funds for this work, but it's like, is there a website with a list that says, we want there's no information. So you're right. Yeah.
And even if you have a website, so like Andy, for instance, has a site with all its members, and then you sort of like maps it out and shows you who are the capital providers, who are the capacity builders and everything. Not many people know that there's a site like that, for instance, right? So it's just being able to figure out ways how you can be able to sort of like close that gap, right?
Information gap, yeah.
So I applied for the job, was quickly shortlisted. And I remember during the interview, because it's in the middle of all this drama with my lawyers, right? I'm having an interview. It's an online interview with the head office in Washington, D.C., right? Yeah. And I couldn't help it. I kept bringing up, like this, I've had these issues with this co-founder. And I kept bringing it. I couldn't help it. Like, I was still very emotional about the whole process. And I was so certain I'd blown it. But turns out I showed passion. So I showed a deep understanding of sort of like some of the things that I needed at the time, but I showed passion at the same time. And also, of course, there were other things that they're looking for, and I think kind of ticked those boxes, I suppose, right? But I just wanted to mention that part because it was so hilarious to me. Because I remember going back and I was like, oh God.
Did you have to do that?
It is that emoji, the face palm, as in, that was me. Like, totally messed that up. But no, and then so I got the job. So I was Andy East Africa program coordinator. East Africa program coordinator, yeah. And I worked at the time with Mary Mwangi, who was the chapter manager at the time, and I think the two of us, did great things, able to bring on new members into the system, into the network. But I think the thing I did was learn a lot. For me, it was a steep learning curve. Figuring out who are the capacity builders in this market, who are the people who bring entrepreneurs and grow their skills, yeah? Who are the people who help them find talent, who are the people who help them find capital, who are the people who provide the different types of capital. I learned there's different types of capital. I learned there's grants, there's impact capital, there's venture capital, there's private equity. I learned there's a continuum of capital out there, and you need to figure out where you fit. There's angel money,
Not so much.
Not so much. Not in Kenya, not that much yet. But just being able to understand all of that and being able to immerse myself in the work of all these different intermediaries who are working hard to really build the ecosystem here in East Africa. And that was a fantastic experience. When I was in this role, I think 18 months down the line, I got a request for me to apply to the East Africa Private Equity and Venture Capital Association. I should mention that in between those 18 months with Andy, I realized quickly that I want to be on the fund side of things. I want to understand how capital is brought in, how it's deployed, what it's looking for, and what the gaps are currently. Like I knew that already while I was at Andy. So when this call to make this application for the East Africa Private Equity and Venture Capital Association came, first of all, they're looking for an executive director, and I was like, okay, this clearly puts me in the space where capital is that? Because what it is, it's an association with all these, private capital providers, right? And I was like, this is fantastic, right? But it was such a hard move because I was really enjoying the work I was doing with Andy.
Right.
And I know that was probably one of the hardest decisions I had to make, even the application itself. And then when I got accepted into the role, it was just really difficult. I remember my exit interview with Randall Kempner, who's the executive director of Andy. It was so like, I'm sorry, I'm leaving, but I love you guys so much because of just how much I'd learned and grown with them. It's a fantastic team with, offices in all the markets, all the emerging markets across the world, so much work they do. And but I had to leave. The opportunity had come and I just couldn't leave behind. So that's how I found myself at EAVCA.
Awesome. And EAVCA was forming at the time?
No, EAVCA had been formed in, I think it was 4 years prior to that, 3 years prior to that. Okay. So the story now I can tell you the story about EAVCA. So EAVCA was formed.
Let's start with what you do and then maybe the history.
No, the history will inform you what we do.
You know better than I do.
Yeah. So in 2012, 2013, 7 private equity firms who had been active in East Africa could see that there was a lot more interest in this region, but there wasn't enough awareness of what private equity or venture capital is, both on the public sector and in the private sector. So the public sector, the policymakers are like, who are these people? How can we regulate them?
Or tax them.
Or whatever, like what is this capital? Where is it coming from? What's going on here? Right. Private sector, not enough businesses are aware of, who private equity, what do you want with my business?
Exactly.
We're Africans, so we're warm and welcoming, but we need to know. Who are you first?
When it comes to my pie?
Who are you first? Explain yourself, right? Okay. And that's not true for everybody, but there was a sort of like, an area, or sort of a group of, businesses or a section of private sector still needed to understand that. So for the need of that awareness, these 7 private equity firms came together, self-organized, and the EAVCA was born. Yeah. So some of these firms, them, like African Invest, Actis, Catalyst, Fanisi Capital, those guys, right?
Okay.
Came together.
So the goal was to educate?
The primary goal was to raise awareness on private equity as an asset class in this market, right? And then sort of like created the 4 pillars on how we do that, right? So we have advocacy, where we do a lot of work with public sector, with policymakers, regulators, sort of like creating those relationships and making sure that they understand and create an enabling environment for the membership. Then there's, so we work with, all the regulators, so Competition Authority of Kenya, the Retirement Benefits Authority, because of the mobilizing local capital piece. Basically anybody who sort of like interfaces or has relations with any of our members or the deals that they're doing in this market, right? Then there's training, where our mandate is to really bring up the knowledge and the capacity level of practitioners in the industry. So we have a lot of basically classes running across the year, all the way from the junior level to senior level.
So classes about what?
It could be about anything. So every first quarter we have what we call the professional development program, where junior practitioners in the field, in the industry, come to build their skills and their knowledge on everything from deal origination to due diligence to legals, basically the entire spectrum of doing a deal, right? Up until exits.
The process of investing private money into a company.
Yes.
Right? That's what we're talking about. Essentially, there's a set of things that you need to do, to know, to be aware of. Skills you have to develop, processes that you need to know about and how to go about them. And what we do is we don't do it textbook style, right? Because most of these analysts or associates in these firms, or even the ones in advisory firms, maybe like the Big Four or whatever it is, probably have gone to some business school somewhere. Right. So they know the textbook stuff. Right. What we do is we use local experts, local experts. So the head of
I won't mention firms here, would come and do a session on commercial due diligence, because what you learn in Wharton or Harvard or whatever it is not what you're going to do here in Nairobi, right? So it's the basis, it's like the base, but then what is the practical way of having an effective commercial DD done on a company in East Africa, for instance? So we have all these high-level people who've been doing this for 20 years, 30 years in this region and are extremely proficient in this, come to run those sessions for the junior, mid-level practitioners here. So those are some of the trainings for the more junior guys. We have things even for the more senior industry players, so things around negotiations, where we bring in trainers from around the world to take them across negotiation. It's a key skill that you need to keep honing. Or we did one recently. We'll have a series of them around director performance on boards, because every time they make a deal, they get a seat on the board. The people you put on those boards, as your portfolio becomes bigger and bigger, more of your team sits on these different boards. Are they equipped to be effective?
Or are they just
one
body?
Yeah, we need some proper, high performance in this and participation in this board. So we need to build those skills in everybody in these firms who are under our membership.
So that's an interesting one, because what are the skills that would make you a good board member, for example?
Come for the training. No.
I think I do know, but I feel like...
So there's all the things that you need to be able to understand, yeah? So there's all the technical skills, like how you'll be able to understand financials and everything, but then also being able to, how do you relate to the other, so the softer skills, how do you relate to the management, how do you solve conflict? Remember we talked about boards earlier. So there's very many levels to it. Actually, the partner we do this training with, the firm is called Sirdar. They sit out of South Africa. They have an 11-month program. And so what we try to do is condense that to bite sizes, because, every week you do XYZ hours and whatever it is, right? But then we've partnered with them to give bite-sized workshops, just for those people who can't.
Video thing I can watch. What's?
That's feedback for them, so I'll show them this video.
Do I need to sit for months?
No. But then also there's a value in why
conversation back and forth.
Yeah, because you're not doing the training on your own. You're in a room of maybe 15 other directors who are sitting on different types of boards. You're able to bring up issues that people are facing.
Makes sense.
Yeah,
it's almost like an MBA program for.
Exactly. Yeah. So we have all sorts of trainings. We have trainings looking at, so we've had all these tech deals in tech that have happened over the past 5 years. That means we're going to be seeing exits coming soon. How do you prepare for exits in this market, in a market that has not had exits in tech?
Are we going to have exits coming soon?
I'm very positive that we will.
How soon is soon?
Well, that's relative.
Our lifetime? What are people saying are the paths to exits, right? Is it private equity, later stage funds?
So in this market, what we see a lot of is buyouts from bigger funds coming in. So secondaries basically is, I think, the lead, and strategics as well. Okay, so
it still needs to kind of develop, right?
Yeah, it's such a nascent market. It's still so early on in the grand scheme of things. If you compare ourselves to even South Africa, like Kenya, East Africa, it was still really early in that sort of like growth path.
Right. And then there was this other kind of I don't know what you call it, but there's a public market thing that was created called, what was it called? To absorb some of these tech companies and take them quote unquote public. There was something that was created.
Is it the GEMS market? Is that about? Yeah.
Are you?
So the stock exchange, different institutions, regulators are really trying to, build up our capital markets basically, right? These are new initiatives that are, I think it's still too early to sort of like make any claims or whatever it is. They still need to finesse a lot of things and also really communicate and articulate the value and the incentive to sort of like list on the GEMS market, for instance, right?
Has anything listed on that? Is it up and running? Like if somebody
I think we have a few, maybe a handful, maybe.
Really?
Yeah, I don't have the exact stats on that, but I'm not ready to write them off at the moment. I still think things that it's early days, yeah.
It's interesting. There's actually an initiative similar to this that is happening in Silicon Valley.
Okay.
They're trying to give an alternative path to a public listing in that part of the world.
Okay.
Now, I just remember reading about it. I don't know the specifics, but it's just interesting to note that there is a precedent, even in mature markets, where they're like, yeah, this traditional listing in the New York stock market is not enough for tech companies and so on and so forth. So I guess maybe the point there is everybody is evolving.
Yeah.
Even the mature markets are evolving. And we are kind of, I guess that says we're on the right track.
Yeah. Yeah, no. So, of course, another thing with early stage days is there'll be a lot of mistakes. You know, there'll be a lot of. I'm scared to say failure because you'll say that's the end. Or fails. But to take your words, that will be a lot of learning and growth. So yeah, I'm really positive about this market. I think, you know, there'll be a lot of mistakes done and things like that. But I think also the fact that there's the willingness and the initiative from the public sector to create institutions just like that, platforms like that, I think that's a great first step.
Great first step.
Yeah.
Yeah, something had to happen and something needs to continue happening.
Yeah.
So why, if I was just to net it out, right, like why should an entrepreneur, right, listening to this, care about what EAVCA is doing, right? Relate this to somebody who's an entrepreneur, somebody who's trying to build a business here locally. You know, why should they get excited or even care about you guys? Yeah.
At the heart of what we're doing is we work to, and not even trying, I think you're successfully working to, make East Africa, visible as a prime destination for capital, right? Okay. So, you know, we have a lot more, and you've seen over the past 3-4 years, we have a lot more entries with regards to fund managers in this market and diversified kinds of funds in this market, increasingly. While initially we had a lot of firms that would do much bigger deals, very traditional sort of like private equity firms. Now we're seeing, all these early stage, I wouldn't say all these, but an increased number of, a growing number of, early stage, early VC, late VC, there's a whole sort of like variety of capital coming in. That's one. Two, we are working every day to mobilize local capital because currently private equity and venture capital is underpinned by foreign capital, right? So more than 80% of the capital comes from either North America or Europe, right? Yet we have evidence that there's pools of capital here locally that can also be, sort of like drawn into private equity and venture capital.
So talk about what those pools of capital are.
A big one that we've been working on is pension funds here locally. So assets under management for pension funds in East Africa is at about $11-12 billion, right? That's the total AUM.
So that's actually money that's being held by pension funds right now, obviously.
Yeah, invested into different, asset classes and things. But then 3-4 years ago, in 2015, regulation was introduced where up to 10% of AUM can go into private equity and venture capital.
Regulation mandating or allowing?
Allowing, yeah.
Creating an opening for that to happen.
Exactly. So if you look at it, so if you have about $12 billion AUM, up to $1.2 billion can go into private equity and venture capital. So this, regulation came in 2015. And so what we saw, and at the point, I think we had only 3 pension funds that had put some money in private equity, right?
And who are these? I think I know one, but...
Yeah, do your homework.
Can you share or can you not share?
What I'll do is I'll share a report where you can sort of like look at all these stats, right?
That's great.
I never try to mention companies or organizations by name.
Why?
Because then if you miss one, the one you miss will always come and say.
You didn't say my name.
Yes. I don't want, I'm trying to reduce error. So. I've learned.
You have to be.
I've learned. So yeah. And what we've seen is that the last survey we did, which was end of last year, 2018, we had 23 pension funds who had said they're interested in private equity and 15 who had actually committed on paper that they would be invested into private equity. So that is a marked growth, that's right? And that's
going from
just from 0.0016 something like that
of
percent.
AUM
Yeah.
was targeted to, so wow.
That had already
So almost
been
basically
and has grown to, no, don't say that, there was money, to 0.08. So and now it's growing. It's really growing. That was at the end of last year, but then, if by the end of this year, I'm sure we'll have better statistics with regards to show the growth that has happened.
So your work is definitely yielding results.
It is yielding results, and I want to even mention a few other things that we've done in between. So over the past year, for instance, one, we did a report called the Alpha Market Report that looks at private equity as an asset class, benchmarking it against 4 other asset classes. Real estate, fixed income. Public equities, etc. And because then, it became a challenge. You're asking people to stop, because currently pension funds put most of their investments into public equities, government paper, things like that.
Very safe.
Very safe, yeah. And it makes sense, right?
Totally.
It makes sense.
It's pension funds, it's people's retirement.
Exactly. Then you're telling them, now we want you to do alternative assets, private equity. Where's the data? They want to know how are you performing.
How they perform.
Yeah, what's the track record? So we were able to do a report, just to be able to show them over the past 10 years, over the past 5 years, the performance, and show them against the other asset classes, which was, a really good tool.
Do you have that?
It's publicly available.
That's great.
Yeah, so all our research is publicly available on our website. Yeah. And so, then being able to sort of like show because if you think about it, private equity is, let's say, it's younger than 20 years in this market, right? Mm-hmm. So we're talking about a teenager who, we've seen their potential, but we're not really sure about what, they can really do. Mm-hmm. So we were able to really draw it, from our membership. They give us the data to show, what they invested in, what are the returns they've gotten over the, some of our members are in the second, third funds right now. So, be able to show the growth across the different funds. Right. And that was really key. And now we can use that as a tool out there to really, champion for private equity as an asset class. Yeah. That's one thing. The other thing we did is we partnered up with IFC and FSD Africa to create a curriculum to educate the trustees of these pension funds, because who's making the decisions onto sort of like what asset classes they're investing in, right? It's these trustees who are not extremely familiar with the private equity, right? So we created, and we resourced and got Riskura to help us create a curriculum. So a series of workshops where they come and they learn about private equity and how do they assess GPs and how do, the whole shebang really. And they've been doing this for the past year. And then we created a toolkit, or more like an investment guide, that they can actually use when, sort of like assessing opportunities out there. So, and we launched this last month. So these are the initiatives that we're doing as EAVCA to mobilize local capital. And that is, I think, really exciting. And I think from now we just expect to see a lot more going into, the asset class.
That's exciting.
Yeah.
That's wonderful. I think I'll add one more thing that you can share with those, what do you call them, trustees?
Yeah.
There's this podcast called Origins out of New York, and it's a fund manager, and their guests are LPs, right? Equivalent to those trustees, and they talk about how they think about deploying their pension capital, right? Being LPs to fund managers. So it's very, very educational. There's a lot of technical stuff, there's a lot of kind of soft stuff, there's a lot of kind of useful information that, if people can just continue to educate that audience. Yeah. So that was super helpful for me when I was actually learning about that space. So
okay.
Origins, check it out.
Okay, sure.
But I guess one of the things that I always try and make sure people have is takeaways. And if you were to just kind of give our audience some takeaways, that some lessons learned, takeaways they can have from your entrepreneurial experience and what EAVCA is doing, and maybe the future of where we're going as an ecosystem. Maybe those 3 things that they can take away from the conversation.
Oof. That's a hard one. So I will skip the personal part. I'll say reach out to me. I'm happy to share anything. But with regards to EAVCA, there's a lot that we're doing on a daily basis, working with people, institutions on the ground, but also the global environment, just to make sure that East Africa has a voice and is visible out there. So they need to keep doing what they're doing. Not giving up. There's more capital out there, regardless of what is happening in the traditional financing sector. In this alternative space, there's capital that's available out there. There's mistakes that have been made, but are being corrected. So I think this is a really good time to really research and find out, what capital is available, what is relevant for me. This is actually for my personal takeaway, I guess. Yeah, what capital is available. What other institutions do I need to reach out to who can sort of lay that for me, right?
Where would they get this research? So you remember you were saying information is hard to come by?
Yeah.
Where do I start?
EAVCA, I would say. Start with us.
Set you up.
Yeah, start with us. Go to Andy as well. Okay. I have a lot of resources and a lot of information. But also the, incubators and accelerators out there are working hard to sort of also collect their own data and create relationships with the different funders and things like that. So they can come talk to you, for instance. I know you're incubating as well, ideas and people here.
Yeah, so actually, this is important. We have found, we've been super successful in doing our podcast, so people think we just do podcasts. So I'm going to ask you, what do we do? This is an opportunity for you to give back.
Oh my goodness.
And why do you think it's different?
Why am I being put on the spot again?
Because you're smart and awesome.
I think in one sentence, in a nutshell, what Impact Africa is doing is you create a platform where, young potential entrepreneurs can come in and learn a lot of skills and prepare them for a journey either in entrepreneurship, so build their own entrepreneurship. Enterprises, or work for a startup or business SME out there. And how you do this is giving them opportunities to create projects that could turn into a business. I'm sorry, I'm terrible.
That's pretty much it. So,
I'm terrible at this.
I'm gonna be putting everyone in the spot.
Let's be honest. The first time you asked me what you do, I talked about the podcast as well. Yeah.
People must think I'm such an, I don't know. I'm such an
Which is not a bad
person.
thing. Which is not a bad thing. Can I tell you, by the
way? You
way?
can't live on a podcast. Hello?
I have people out there who think I host story nights. Because if you don't know about this, I am also founder of Hadithi Njo, which is a regular storytelling event. Right. There are people out there who think that's all I do. I just host nights where people come and tell stories and then go. So I would urge you now to tell the audience what you do. Yeah.
Right. And I'm going to be doing this all the time.
Please do.
So basically
and please don't put your guests on the spot.
They need to know what we do, goddammit. So basically what we do is we provide an environment where young talent can approach the startup entrepreneurship, the digital transformation of Africa is what I call it. There's a big gap between I'm coming out of campus and I'm technical or I'm interested in innovation, when you're coming out of what you're doing, like your experience with that, and being able to start a company. Forget a company, being able to start the process of investigating whether an idea will work, because that's the whole thing, right? There's a big gap there, lack of it's just bootstrapping capacity. Money, expertise, somebody to work with, a place to go, all that stuff.
All right.
So fundamentally what we do is we say, I think there has been an over elevation of the entrepreneur as this sole, intrepid, all-knowing, ready to take on the world kind of human being or, superpower, right? But that's not how success happens. That's not how companies are built. Companies are built with teams of people. And companies are built by people who know what to do, right? Generally speaking. And so we provide an environment where young people coming out of campus can come in and work on projects. What's a project? Project is I don't like to call it an idea, it's an insight. We look to develop insights. And we just look to say, okay, where is there a market opportunity to build something into, right? I think in Africa, we still have the luxury to build very obvious things, in a sense, right? Because nobody has been serving us with technology for a long time. We've been very much an afterthought. So basically we say, okay, fine, let's look at where there should be a company being built. And it's not a very abstract, unproven market. So that's how we think about that. Of course, we keep an opening for ideas that have not been done yet. But at the end of the day, it's like stitching together the digital infrastructure that will make that Africa will run on. And so basically that's what we do. We put in project teams, work on ideas. It's not their ideas per se. It's about the execution process. And it's about teaching people how to walk through that in a systematic way, providing cover. So we're not trying to, we take the mental models that already exist. People coming out of campus will look for an internship. Okay, so we make it an internship, right? We're structured as a nonprofit because we're looking to bootstrap the 0 to what I would say 1. We give people 12-month internships. We give projects 12 months to live. And we just work on getting to traction. And what comes out on the other side, you're right spot on, is 2 things. One is much more, I would say, 21st century hardened young professionals. I've been through this process. I know how to think systems-wise. I know how to ask the right questions about something. I know how to be scientific in my approach, right? And kind of very pragmatic in making decisions. All those skills that you gain over time, we squeeze them into that time because now you're working on real-world things that have potential to be a thing. And the other thing that comes out on the other side is fundamentally sound early stage startups. Because you and I know the reason why startups become uninvestable or unattractive to investors or capital is because they've made some wrong decisions, right? Because they had to survive. All these kind of things, they didn't put the right structures in place because they didn't know. Maybe they and their co-founder are kind of in this weird place conflict-wise, right? Those are the fundamentals that make a business viable, right? And so we eliminate all that mucky muck and that gap. And so, you could call us an incubator. We incubate talent. We incubate projects. And it's not so much about your idea. It's about execution. And that's where what I believe is a significant missing link in terms of unlocking the pipeline of opportunity.
And that in a nutshell is Impact Africa.
Awesome. Thanks for coming.
Thank you. Thank you.
Very insightful information. I didn't know so many things about you. And that's why we do a podcast, because you always learn about people and things.
Thank you.
Awesome.
All right.